mortgage rates have risen to their highest level in nearly a year, causing homebuyers to pause at almost 7% rates, which could add $30,000 to a $500,000 mortgage over the life of the loan. This video is designed to help first-time home buyers understand the current state of mortgage rates and how they can impact your ability to purchase a home. You will learn how to navigate the current mortgage rate landscape, the impact of rising mortgage rates on home affordability, and strategies for managing your mortgage planning in a rising rate environment. What are mortgage rates? Mortgage rates, also known as interest rates, are the percentage of the loan amount that you pay to the lender for borrowing money to purchase a home. For example, if you borrow $500,000 at a 7% interest rate, you will pay $35,000 in interest over the first year, in addition to your monthly principal payments. How do rising mortgage rates affect home affordability? Rising mortgage rates can significantly impact home affordability. For instance, if mortgage rates rise from 6% to 7%, the monthly payment on a $500,000 mortgage could increase by $250, making it more difficult for buyers to qualify for a mortgage. This could also lead to a decrease in home prices, as buyers may not be able to afford the higher monthly payments. Strategies for managing mortgage planning in a rising rate environment. To manage your mortgage planning in a rising rate environment, consider working with a mortgage broker to explore different loan options, such as a fixed rate or adjustable rate mortgage. You should also consider making a larger down payment to reduce the amount you need to borrow, which can help lower your monthly payments. For example, if you put 20% down on a $500,000 home, you will only need to borrow $400,000, which can save you $100,000 in interest over the life of the loan. How to use the Housing Affordability Index to inform your home buying decision. The Housing Affordability Index is a tool used to measure the affordability of homes in a particular area. It takes into account factors such as median home price, median income, and mortgage rates to determine how affordable homes are for buyers. For example, if the Housing Affordability Index shows that homes in your area are becoming less affordable, you may want to consider looking for homes in other areas or waiting for the market to cool down. In 2026, the Housing Affordability Index has shown a significant decrease in affordability, with many areas becoming less affordable for first-time home buyers. Key takeaways. In conclusion, rising mortgage rates can have a significant impact on home affordability and mortgage planning. It's essential for first-time home buyers to understand the current mortgage rate landscape and to consider strategies for managing their mortgage planning in a rising rate environment. By working with a mortgage broker, making a larger down payment, and using the Housing Affordability Index to inform your home buying decision, you can stay ahead in the market and achieve your goal of becoming a homeowner. If you're a first-time home buyer looking to navigate the current mortgage rate landscape, click the link in our description to download our free guide to mortgage planning in a rising rate environment. Don't wait, take control of your mortgage planning today and stay ahead in the market.